Welcome to yet another edition of the McAnulty Method, where financial expert Frank McAnulty shares his expertise and knowledge with us, so that we might lead a better financial life. We're joined today by Colin Sorrells. Hey, Colin.
How you doing?
And Ash Seraphin. Hello, Ash.
Hello.
Um, and Ash, again, you said you had some questions about healthcare. So I'm going to turn it over to you to ask your question of Frank and let him explain it to us all.
So my main question is, what is the difference between subsidized healthcare and regular healthcare coverage from private companies?
Well, the main difference is subsidized healthcare is what probably is more commonly known as Obamacare. You know, you're going through, you got to go online in each state. You know, I forget what the name of it is in California, but you're going through their portal and you're buying the healthcare that's offered through the government. And depending on where your income is, they subsidize it to a certain extent. And it's subsidized depending on your, like I said, your income. If you make less than 4 times the average wage for a single person in California, or the poverty wage, it's subsidized to a certain extent. And even then, you can pick different levels. You can pick what they call gold subsidy, bronze subsidy, or silver subsidy, bronze subsidy, depending on what coverage you want. You know, it's most young people think, I don't need health insurance. What could go wrong? I'm bulletproof. But that's why, you know, even if you feel you don't need it, it's probably a good thing to look at the bronze category, which is what they call a high deductible category. So if something really bad happens, you have coverage of some sort. And even then, depending on your income, the government's going to cover a lot of the premium payments. Most college students don't have the income that they're going to pay hardly any insurance costs. So it's a good thing to just check into it and get it.
Do they offer the same medical care and medical plans as the bigger companies?
Not especially. You know, some of this, and this is where medical gets a little weird. You know, you'll have some doctors that'll just say, well, I don't take that plan, or you're going to have to pay more for that plan. Once again, if you don't think you're going to need it much, it's not going to hurt you. You're just covering yourself in case something really bad happens. At one time, that's the only insurance I had. I had a $5,000 deductible health insurance. Had to pay for myself. Figured, okay, I can pay regular bills. I end up in the hospital, I need some coverage. You know, and the greatest subsidized health insurance there is employer health insurance. Find an employer who pays for your health insurance. Then you'll probably get a better coverage. It's one of those things that's way too complicated for the average person to figure out. Other than everybody should have some health coverage. And quite honestly, the best thing in my mind that happened with Obamacare is they made it possible to keep your children under your insurance until they turn 26. Mm-hmm. Whereas it used to be, I believe it used to be before that 21, or they had to be a full-time student. With Obamacare, you got to stay on there until you were 26, regardless.
Just out of curiosity, Colin, Ash, are either of you over 26?
Nope.
I'm not.
All right. Are you guys both on your parents' insurance?
Nope.
I'm not actually 100% sure because I get my insurance through the state and I don't know if it's lumped in with my mother's.
Okay.
No, I went
Colin, you don't have insurance?
no, I went your route. I did the employer for like a year because they'll pay half of it. And much better coverage. My dental bills went down big time on all those cavities. Um, and then I did Cobra for a bit, and then I got on state for a bit, but I need to get off that before I get in trouble. So bounced around a lot.
Well, as Ash will tell you from our insurance class together, I'm always heavily overinsured. I like the idea of having insurance so I don't have to worry about it. I don't, you know, my luck, nothing will happen as long as I have insurance, but as soon as I don't, that's when something's going to happen. But is there, what else, what other questions on the health insurance did you have, Ash?
Oh, is there a financial burden that comes with subsidized healthcare, more so than other healthcare, specifically when it comes to taxes?
No, there's not a tax burden. There used to be a penalty if you didn't have health insurance. This is one of the weird things about when they put Obamacare in. They basically said, well, it's going to cost, let's say it's going to cost you $250 a month to have health insurance through the system. And they say, but if you don't have it, we're going to fine you $1,000. Okay, what? It didn't make any sense. It's more, it should have been, and they find you on your taxes basically. Okay, you have to, it should have been, okay, you can get health insurance for $250. If you don't get it, we're going to fine you $5,000. So the penalty is greater than the cost. But, you know, Washington being Washington, there's very little logic a lot of times. But no, so there's no real penalty now. They still ask you if you have health insurance. And you're supposed to have health insurance. Like I said, I think it's a good idea, but there's no penalty for not having it. And so it's gone back to the same way, even though they have this whole system in place that if you don't make enough money, you get coverage. And in the state of California, we also have, I guess it's Medicaid for people who don't have enough money. They can have insurance coverage through that. But you have to apply. You just can't hope that the insurance fairy comes down and gives it to you.
Now, if you don't have insurance and you're in like an accident or something and you're out of it and they whisk you away to the ER and they set you a broken leg or whatever. Just out of curiosity, Frank, what happens then?
Well, that was a great fallacy in the whole argument about, you know, national health care was that, oh, people are dying in the streets. No, they're not. Hospitals are required by law to treat people. Now, are you going to get the best treatment? If you can't pay, they're going to give you as good a treatment as they should, but it's the follow-up treatment that falls off because once you're out of the hospital, it's gone. And yes, you're going to get a bill. I've seen emergency room bills. I've gotten emergency room bills. It's amazing they don't have the a symptom in the U.S. of heart attack from medical bill. You go to the emergency room and you're going to get a bill for $15,000. Just that's what's going to happen. I don't care what they do. You're going to get a bill for $15,000. And I've seen the financial statements of big hospitals before, and I remember looking at one there. Course of the year, they billed $5 billion. They wrote down $3.5 billion. So they only collected 30% of their billings. Now, two things. One, it's the person that got hit and broke their leg and has no money and can't pay. And the other is the insurance companies don't pay what the hospital bills for, which I could go off on that for a whole long time. I think it's the only business on earth where they just send you a bill and say, hey, let's see what they'll pay. It's really silly. I think it'd be much more honest and straightforward if you saw exactly what, if this is what the insurance company pays, this is what I should be able to pay.
What happens if you don't pay your medical bill then?
They will come after you. They have a whole department that will file a lawsuit against you. So like everything, if you're a normal person, that's a very bad thing. And the biggest cause of personal bankruptcies in this country is medical bills, because they do go away in bankruptcy. And if I feel that's no one should have that happen to them because of a life-threatening illness. There should be a national health care plan that once you get over a certain amount in bills, you have a federal system that comes in and steps in if you don't have private insurance. So yeah, that's what happens. Ash, is people just declare bankruptcy to get rid of them. Or if they're, indigent to start with, they just keep throwing the subpoenas in the corner and say, who cares? I don't have anything. What are you going to get?
There you go. The blood out of a turnip.
That's basically it.
All right. Well, any other questions?
I think that's it.
All right. Well, thank you, Frank. I certainly learned some stuff there. So I think that will wrap it up for us. And this question of subsidized healthcare, yay or nay?
Well, I think it's yay is if you don't have it otherwise. They're doing it. It goes back to my favorite saying, personal responsibility. What a concept. It's everything's there to help you get health insurance. Everything's in place, but you have to do it. Just like so many other things.
That's right. All right. Well, thank you, Frank. Thank you very much, Ash, Colin. We'll see you next time.